Make no mistake, this is not financial advice. Nothing herein shall be construed to be financial, legal, or tax advice. Imagine you purchased Tesla, GameStop, or Apple stocks in 2010, then you'd be a millionaire today. As said by stock experts, if you play wisely, stocks are the best and most reliable investment and create money for your future. But as a beginner, getting started can feel daunting as lots of people struggle to grow. So in today's video, we're going to explain how to kickstart your investing journey by learning how to invest in stocks. Everyone wants to grow wealth, and investing in stocks might be the best option. But keep in mind, where there are big gains, there's more risk involved. This indicates that it belongs to a category of assets subject to a significant amount of price volatility. Therefore, beginners should carefully consider the level of risk they can tolerate when thinking of investing in stocks. In general, the potential for loss or gain in investment is proportional to the level of risk involved. Now, let's explain how you can start investing as a beginner. If you have knowledge of economics, you're aware that the value of your money decreases over time thanks to continuous inflation. The rate of inflation hovers approximately between 2 to 2.5% regularly. And as based on the facts, we can deduce that the price of goods go up by about 2% each year compared to the previous year. For example, in the year 1970, the price of a cup of coffee in the United States was 25 cents. However, the price of that same cup of coffee in 2019 was $1.59. Now, let's say you currently have $1,000 in your bank account. You then tuck it away under your bed for the subsequent 10 years. If you don't look at it again for 10 years, your $1,000 won't be worth $1,000 anymore because the cost of everything will have increased by about 2% every year. Therefore, the value of the money you have will decrease. But on the other hand, if you had invested those $1,000 in stocks, your money might have increased by 10 times. That's the beauty of stocks, which brings investors from all across the globe and make millions of millionaires every year. When it comes to investing, you have many options available in today's world, which means you can really tailor your investment strategy to your level of expertise. Of course, depending on your preferences, the amount of time you save investing is entirely up to you. But if you don't have time to manage, you may hire a qualified financial advisor to handle the investment of your money. This is a good option for those who want to spend only a few minutes per year worrying about their investments. Similarly, as a beginner, hiring an expert can save you lots of money when you only have basic understanding of the stock market. On the other hand, if you want to take control of your own financial situation, the do-it-yourself option is excellent because you can devote more time to making decisions regarding your investments. You'll need a brokerage account to choose your own stocks or funds if you want to invest in the stock market. Your investment goal and the time frame you need to accomplish it will determine the appropriate amount of money for your investment. One common investment goal is retirement. If you have a retirement account at work, such as a 401k, and it offers matching dollars, your first investment milestone is easy. Contribute at least enough to that account to earn the entire match. On the other hand, your first investing milestone is more complicated if you have a retirement account at home, such as an IRA, and it does not offer matching dollars. Nevertheless, you won't want to pass up the opportunity to take advantage of that free money. The general rule of thumb is to invest 10 to 15% of your total income each year for retirement. That may appear impossible right now, but you'll be able to achieve your goal with time and effort. When it comes to your other financial objectives, you should first consider your time horizon and the amount you require, and then work backwards to determine how you can divide that total into weekly or monthly investments. If you don't have access to a 401k, you have the option of opening an individual retirement account, or IRA, such as a traditional or Roth IRA, in which you can invest for your retirement. If you're investing for something other than retirement, you should probably steer clear of retirement accounts and go with taxable brokerage accounts instead. It's a common misunderstanding that you need significant capital to open an investment account or start investing. That is categorically not the case. There's no required minimum investment to open an account with many online brokers, and there are plenty of investments available for relatively small amounts. These online brokers offer individual retirement accounts, or IRAs, and regular brokerage investment accounts. New investors typically have a question during this stage of the investment process. I want to start investing in stocks. but I'm not sure how much money I need. The amount of money you need to purchase a single share of a stock is directly proportional to the price of the shares. And the price of the share of stock can range anywhere from a few dollars to several $1,000s. If you want to invest in mutual funds, but have a limited amount of money, an exchange-traded fund, also known as an ETF, might be your best option. ETFs trade like stocks, which means you can purchase them for a share price that, in some cases, can be less than $100. In contrast, mutual funds frequently have a minimum of $1,000 or more investments. Now that you have an account with a brokerage or advisor, it's time to keep an eye on your investments. Again, if you're working with a human advisor or a robo-advisor, this should be an easy task. Your financial advisor will handle all of the laborious tasks, such as managing your portfolio for the long term and ensuring that you stick to the plan. You'll be responsible for making all the trade decisions if you manage your own portfolio. Like, should I liquidate my holdings in the stock or fund? If there's a decline in the market, do you plan to buy more or sell more? These are challenging decisions for investors of all experience levels to make. To make sound choices regarding your investments, you must remain up to date with relevant news. On the other hand, investors who take a more passive approach will have fewer choices. Because they're looking at the big picture, they tend to buy on a set schedule and don't worry about the short-term fluctuations in the market. Following these steps can add much value to your investing journey. As a beginner, we hope this video was pretty helpful for you. If so, make sure to like the video and subscribe to our channel for more informative videos in the future. Thanks for watching, and we'll see you soon.